Mike and Barry in real life, and today I've got J. Todd Coleman and Gordon Walton with me from Crowfall. Woohoo! You know, what? Okay, so first off, guys, we're doing this because you can now talk about this round of funding that's super special that you guys did with ArtCraft,
Right.
which really seems to be kind of a groundbreaking thing. But before we talk about that, for the people who don't know what Crowfall is, give us a quick rundown of what Crowfall is.
Okay, I'll do it, I
Yeah,
guess.
you should
So
do it.
Crowfall is effectively a dynamic world MMO. So there aren't very many of these. Eve is probably the best example. Back in
Mm,
the early days of MMOs, there were more examples. I want to say UO and Shadowbane, both, and Galaxies were all borderline, if not squarely in the area of dynamic world MMOs. And the difference there is really, do my actions as a player affect the world around me and the game for the other players? Right? If you look at games like WoW, the answer to that question really is no. It's effectively the arc of the game is a series of linear quests that reset
mm-hmm.
for the next guy right behind me. And that's a very different model than a model where I'm actually affecting the terrain and the political landscape and the actual gameplay of the other players, either power or economy or military strength. You're actually affecting other players' gameplays experiences. So it's a model that was very popular in kind of the early days of MMOs and then fell out of favor because World of Warcraft made billions of dollars and everybody wanted to just
Everybody
do
wants to
that again.
copy it.
Yeah.
Yeah, yeah.
So we created a game called Crowfall that has a very Game of Thrones kind of feel to it.
Mm-hmm.
It has a lot of the same kind of dynamic elements that you would find in Eve Online, with heavy faction-based territory control, player-driven economy, but in a fantasy setting. So that's
And
the
and
kind of
and
quick elevator pitch of what we're doing.
and lots of tears.
A lot. Well, we've broken the game out into a bunch of different bands. Is
No,
that
no,
what?
no, 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 no. Like salty tears.
Oh,
Oh no, no, yeah, oceans,
Yeah, yeah,
salty
yeah,
tears,
yes.
yeah,
oceans of
yeah. So that's one of the best things about Eve. You guys know I'm a big Eve player and everything, and just that risk and the reward. That's what keeps me coming back.
Well,
or the
that
pain.
that's if you have a static world, then by definition nothing ever changes, which means you're not really risking anything, right? And so
Mm-hmm.
you can't have if you don't have the potential for loss, you can't actually have the potential for actual triumph or victory. I
Right.
mean, those two things go hand in hand. So yes, you're right. I mean, I tend to focus more on the winning and the victories because that's more fun. But you're right; that doesn't exist unless there's also the flip side, which is that you have real risk that you can lose.
Right. Right. Okay. So let's talk about money, and about. Now, would you guys consider yourself entrepreneurs?
Yes,
Oh, totally.
definitely, absolutely.
Yeah. Okay. Okay. I identify with that too, and but the level that you guys are at, it's not. This is not something that's like starting level stuff. This is you've done a Title 3. What is it called?
Title
Uh,
3 Reg CF raise, so regulation for crowdfunding
mm-hmm, mm-hmm.
raise. So for consumer crowdfunding is the short version name of it.
Now, that part of the challenge here is that the gaming space is very familiar with the idea of crowdfunding and has
Right.
already come to believe they know what that is. This is a
Mm-hmm.
different thing. So
Yes.
it's a
Yes.
different thing with a very, very similar name. So that's part of the challenge, right?
Yeah, so back in 2012, there was a Jobs Act passed bipartisanly, and part of that Jobs Act was a change to the rules for the SEC, where what they call unaccredited investors. So there's
Mm-hmm.
accredited investors who are basically rich people.
Right.
So,
Millionaire and above. You had to have like a
well,
million dollars worth
you
of
don't have to
assets or
be a
something like that.
millionaire, but you have to make, north of 250K
Mm-hmm.
salary continuously, or you have to have $1 million of investable money, not your house, not
Mm-hmm.
stuff like that, but $1 million of actual investable money. So those are sophisticated investors. Those are, the idea behind the current set of laws was, hey, we don't want anybody doing high risk stuff except for very sophisticated people who could throw the money away.
And can afford to lose it,
Right.
right?
Mm-hmm. Mm-hmm.
And what the Jobs Act changed is they said, no, we want to be able to let average people invest in high risk things. Now, we don't want them to invest their life savings. So there are limits on how much, depending on how much you make and what your assets are, it limits to how much you can invest every year. And that's part of the reason that there's portals doing this and not people like us doing it directly with people.
So this is different, by the way, than like Kickstarter or traditional Indiegogo style crowdfunding, right? Where you're
Right.
putting money in just because you want to see a project come to life, and what you're getting is, perks out of it. You get, you've got various perks, mostly for games. It's digital goods with stretch goals that then give you additional digital goods. This is not like that. This is actually investing in the company. So you're making an investment decision, not a purchasing decision.
And the way that it's set up, you can invest for equity in the company, the actual ownership in the company. You can invest in notes, which are redeemable by the company.
Which is basically a loan.
Yeah, so. It's just a high interest loan. And so it lets you do different vehicles to invest in a company, just like a big company would do bonds, right? Which are in effect notes the same way. So what it is really opening up these kind of high risk, high reward options to the average consumer, which wasn't possible as of April last year. It was still completely illegal to do this.
So okay. So there's some natural lag time here. So the stuff gets signed into law.
2012.
And then it's okay. We're going to come up with the actual
2012,
rules.
And it's just now, man.
Yeah,
That's a lot of
now we're going
lag.
to give you the rules. Wait for it. Rules are coming. We're working on them. Any day now. Rules are coming. Wait for it. And literally that process goes on for years. We're all sitting waiting on them to actually, even though it's technically legal, to tell us how to do it without being afoul of the actual rules and it turning out you did something illegal. So we're all waiting, like for years and years and years. We're just kind of waiting for them to get around to actually announcing how you do one of these. And that finally happened in, was it May of last year?
May of 2016. So when we actually started the company in 2013, I was going to seminars on how to do this particular kind of raise.
Where they said we don't know.
We don't know yet, but it's coming soon.
Yeah, I'm just thinking, did you get your money's worth out of that? Because they wouldn't know at that point.
Well, no, we actually, we were looking at this for our company from the very beginning. It just wasn't legal until now. And when we did our Kickstarter, right, when we actually went out and Kickstarted the game, a whole bunch of people who put money into our game, they would send us emails going, okay, now how can I buy into your company? And we go, are you an accredited investor? And they go, accredited what? And
they don't even know.
You can't. You can't. So, we had I don't want to say it was a lot. It was dozens of people who asked us, hey, can I invest in the company? So when we were finally able to do this, we actually got all the way up. We were planning on doing it last May. We thought, we'll go out really early. We'll be one of the first people to do it. And we got all the way to the altar and we went, wow, these rules suck. The rules that you have around how you can do these and what you can say and everything around them, and we'll talk about that in more detail, were so bad that we kind of balked and ran away from the groom at the altar, right? We said, well, we want to do this, but we can't because we don't know how it's going to work. It was too early, too new. And in November of last year, Indiegogo called us about, hey, and if you guys ever do another, crowdfund, we'd like to be your guys. And then we said, yeah, great, but we're not planning on a crowdfund. We were going to do a crowdfunding equity thing, but we kind of blanched at the last minute. They go, hey, we're about to launch a service like that. Let me put you in touch with the guys. And so this opportunity to go as a launch title for Indiegogo kind of changed our calculus, because it gave us more PR around the event, more notice about it.
Well, really,
and if they're working on this for people, then they have everything straightened out.
Well, maybe, but
that was the thought.
We'll talk about that.
So a big reason that we waved off doing it right at the first opportunity we could is because of what we could and couldn't say publicly. So it was very apparent to me that all of the kind of best practices that we learned in doing our Kickstarter, which were very successful, they were not allowed. So effectively, the biggest learning that when people come and ask us, like, hey, you guys did a Kickstarter, it went well. What was your biggest single piece of advice? We say, prep the market. If you go to Kickstarter beforehand, and if you don't go, anywhere, if you don't gather a community, you just go one day and say, put yourself on Kickstarter expecting that you're going to get a bunch of attention and money, you're going to fail. We had a very dedicated PR and marketing plan from day one to build up our community so that we would start day one with, we were hoping 20,000 signups. We actually ended up getting 50, but that's because of that campaign, right? It was a teaser campaign with a whole bunch of information that we were dropping and new art and reveals and interviews. And we really, 90 days leading into that, we hit it great guns. It turns out with this kind of a campaign, that's illegal. It is in fact called prepping the market, and you are not allowed to do that.
Which is, criminal.
So that's like, okay, so right out of the gate, the most important thing that we think made us successful last time, we are not allowed to do legally.
So in fact, it starts the moment you think you're going to do one.
Right.
So you can't say, well, we think we might do one. We better prep the market now before we actually do one.
Yep.
Because then we'd have to shut up. We can't, if there's any indication that you did any prepping of the market, you are doomed.
Yeah. So you can tell we're not thinking of doing another one anytime soon because we're talking about it now.
Right.
It's a absolutely, you cannot talk about it. And then there's a whole bunch of other rules as well about once it's running, what you can and can't say publicly. And the answer is you almost can say nothing publicly about it as well.
You just had to put it all in writing in there, right?
You have to. The only thing you can say is go check our portal site. I would have people ask incredibly reasonable questions on Twitter like, hey, when does your offering close? Like, when's the last day I can do it? And I would have to respond, I can't tell you that. Go look at the portal site, which is like, it just makes no sense. But
there are two kinds of communications, right? So there's what they call a terms communication and a non-terms communication. On both of them, you're sending people to the portal. On the terms, all you can do is you can say, we're raising money. It's this much.
It's preferred shares.
It's preferred shares, and they cost this much. And
it ends this day. And there's like 4 pieces of information.
Right. It's called tombstone information that you can put out publicly. But if you do that, you can't say anything else, right? Now, if you say anything about your company and are talking about your company, all you can say is go to the portal. You can't even give any terms at all.
You can't say any of those 4 terms specifically.
Now it gets even better. If a press person goes and we did an interview about Crowfall, which we do all the time, right? So we do an interview about Crowfall, and we say, oh yes, and you should go to our portal site about our equity crowdfunding rates,
which is what we're supposed to say.
Right.
We're supposed to point everyone.
And then we stop, and then the reporter goes and gets the terms off the site and puts them in the article.
We're now guilty.
We're guilty because they think that we actually got the reporter to put, to mix the communication up. And actually, you're liable to be interviewed by the SEC, both us and the reporter.
Because you're colluding now.
You're colluding
to get around the rules.
So did you refuse all interviews during this period because of that?
Oh, we were very, very selective, and we had this conversation with them both before and after the interview
and recorded it,
because it wasn't just us that's going to get in trouble. It's also going to be that reporter. So we also recorded the fact that we had that conversation with them, so that if we did come get interviewed, we could say, look here, we tried everything we possibly could to say, please, for the love of God, don't do it. And we only had one issue where somebody, I think, accidentally did include one, and we jumped on it immediately and told them, no, you can't say that. Had the article pulled and had it fixed.
But it meant that people who we didn't interview with, who were doing that exact activity, kind of mixing Crowfall stuff and with the other thing, or pulling stuff off the portal and putting it out in the world, we couldn't retweet that stuff. We couldn't like it.
Yeah, we couldn't even retweet it. So if somebody put out an article that had terms in it, we didn't even feel comfortable retweeting that article, because then we are endorsing it, which means that now we're colluding, which means that now we're in violation.
So how do you get anybody to come and even, how can you even promote that this is a thing and people go fund this with all of these restrictions?
Well, it's challenging.
It was really hard.
We did a special mailing to our mailing list twice just about this. We included, mostly non-term communications with our normal communications that we did all the time. And the community itself, the nice thing about massively multiplayer games of all kinds, you have a connected community by design. So they're talking to each other much more than they're listening to us or, hearing what we're doing, but they talk to each other. So as people learn, they talk to their friends, and that's really what drove it over the long term, was that. But I think that, the interesting thing here that people need to back up and take away. So most people have never invested in a brand new offering of
Oh, startup, right?
no, of an actual public company. So these offerings are very much like a public company
Yeah, that's
offering.
true.
The red herring, which you might have heard of, the document that comes out for a company before it goes public, is
Mm-hmm.
just like all the documents that were on the portal site for us. We're in effect a public company now, in a way, right? We've all our numbers
Well,
are
we're
out there
not
public.
technically, but
We're not what's called a real public
yeah.
company, but all the disclosures are the same.
Yeah, it's like a light IPO, sort of.
Yeah.
Anyway, it's you're we're it's while we are still technically a private company, we sure don't feel like a private company in a lot of
There's a
ways.
lot more data out there about us, like there would be about a much more public company.
So you guys raised $669,000, and it's like 1,218 new investors.
Yep.
And what is them having a share, or them buying into this? What does that mean for them?
Well,
Like I got one share. Am I going to be rich
I don't think we let you buy one share, but yeah,
or
no, you're not
whatever
gonna
it
be
is?
rich.
I mean, I bought a small amount, but
Yeah. Well,
No,
thank you.
thanks. Here's the thing, right? So this is the kind of stuff that they told us we couldn't talk about
Right.
before, but we talk about to every accredited investor. Every accredited investor, the first thing they ask is, "What's your exit strategy for the company?" And the truth is that Todd and I have common stock. All the people who just bought stock got preferred. We have a little bit of preferred too because we put in money also, right? But when we started the company, we got a big chunk of the common stock. But as we've issued preferred, the investors have bought that. Preferred have more rights than the common shareholders, so they get paid first if there's an exit event, those kind of things. Um, we on purpose. So we're never going to make money out of this company unless our investors make money out of the company. So
Okay.
how do most game companies exit? Most game companies eventually get bought by some bigger fish. Can you go public? Of course, if you get big enough and your business is robust enough, you can go public. If you don't want to go public and you want to stay private, you can pay dividends to people. Most game companies and most high tech companies don't pay dividends. They invest the dividends in creating a bigger company. Anything that would go to dividends, they try to do growth with because growth makes the company worth more.
Right. So we had an option to just do a note, right? To just say, okay, well, give us $1, and then in some period of time in the future, we'll give you back $1.30 or whatever. Like we
Or
could have done that.
$1.50.
That's
Which is
another
basically
option.
Fig. If you look at Fig.
Yeah, or a royalty. We could have done a royalty style agreement as well. We elected not to. We've raised a fair amount of money now from accredited investors, right? Many of whom we even have a small family VC fund, another VC group like an angel group. We've raised money from fairly sophisticated investors, and we just decided to put this group into the same terms, more or less. I mean, there's a couple minor differences, but it's for the majority of the terms, like by far, it's the same position that those guys are in. So my first company, this is my fourth startup. My first company I ever did, I got a piece of advice from the CEO at the time because I immediately, as a young buck, was like, "Hey, I want to make money. How am I gonna? What's our exit? What's our exit?" And he told me, "Your job as an entrepreneur is not to think about your exit. Your job is to think about how to create a company that is incredibly valuable. Because if you do that, exit opportunities will present themselves. If you
Right.
make something really valuable, you'll find a way to get money out of it." So I've kind of always carried that with me. So when people ask the question, how am I going to get paid? The honest answer is I don't know. I do know that I don't get paid unless those investors get paid, and believe me, I intend to at some point get paid. So my focus right now, and Gordon's focus right now, is on creating a company with lasting, enormous value. And then after that, we'll see. We'll see how we realize that. It's you never. The other adage that I think is very good is companies are bought, they are not sold. if we go looking, or anybody, any startup goes looking for a buyer, by definition, they're going to get a worse deal than if they are not for sale and somebody calls and says, I want to buy you. And they say, I'm sorry, we're not for sale. That's the negotiation position you want to be in, is to be
Absolutely.
in a position where you are not for sale, because then for somebody to change your mind, they have to throw a stupid number at you. So I'm not in any particular hurry for us to get bought. If a really ridiculous offer comes in at any time, we had this conversation when we first met. Hey, what do you want out of this company? Do you want a boutique company where you can just hang out and be the rest of your life? And we both had said no, we don't. We've already got that, right? If we want to just hang out at a company and be an executive forever, we can do that easily. Wouldn't be This would be far easier than what we've done. We're
Hmm.
in this to eventually see a big win. We're just not in a hurry. We want the biggest win possible at the best point.
But that,
Hmm.
and like Todd said, like any day, we know what our business is worth today. Somebody comes in and offers twice what it's worth, we're going to have to look at each other and go, is that the right, if we think that it's going to be worth 4 times 3 months from now, of
Then we
course
won't do it.
we won't do it. But if we go, wow, that's taking a year off the table here, or 2 years off the table of when the business will be worth that, we'd be crazy not to take the money.
Hmm.
So,
Hmm.
we're entrepreneurs. We're looking at it all the time. And so if somebody comes in and wants to offer stupid money, and we say that in the kindest possible way, because
Well,
they may be able to create more value than we can.
Well, that's where it actually
That's how
makes
it normally
sense. If
works.
somebody comes in and says, "Hey, I'm going to offer you 5 extra business," that seems crazy for us. But the reason is, if they have marketing muscle and a distribution network and the ability to reach players that they could get 10x what we're sitting on, then it's a
hmm.
really smart play
It's a
for
smart
them,
deal
and it's
for
a
them
smart
and
deal
for
for
us.
us.
Right. So let me play devil's advocate here,
Yep.
and let's talk about the player of the game, and how this all works out. The Does the player have any interest in you cashing out early? And
No.
how does that impact? How would that impact the development of the game?
It's highly unlikely it'll happen early. One.
Well,
Yeah.
I agree. I agree, but
It's
I'm just,
crazy.
Well,
playing devil's advocate
to
here.
be more specific, the numbers don't make sense until post-launch. They just don't. Like, there's
Hmm.
yes, there's stupid money and people have stupid offers. Right now, the risk profile just doesn't, I don't think, make sense for anybody to come in, because we are pre-launch, but we've got a pretty solid valuation, one that I'm very happy with. It's not unreasonable, but it is reflective of where we are pre-launch. Post-launch, we're either going to shoot up or we're not. And I don't know of any company that would come in right now and say, hey, we want to take that risk. They would be usually smarter to wait and see how that play starts to turn out. That'd be my guess.
Right.
And I could be
Hmm.
wrong,
Hmm.
but I'm
But
probably not.
but with all, and we've seen this over and over in the games business, right? All acquisitions are risky, right? They don't all work out. In fact, probably most of them don't work out
Right.
in aggregate. I mean, we care about the players and we want the players to have the right thing. We wouldn't do a deal unless we thought it was going to be good for the brand.
Hmm.
That's the bottom
Hmm.
line.
Well, and
And
I
good for the
wouldn't do
brand
it.
means good for the customers
I
too.
wouldn't do a deal if I thought that the result was going to end up. So, chain of events, right? You've got the vision that we sold. You've got an audience now that is expecting that vision and bought in on that vision. If somebody were to come in and buy us and immediately start to betray that vision, those players are gone, which means what they bought has no value, which means that nobody wins. So that
Right.
whole chain of events would be terrible. I have no
Well,
interest
it's
in
not
going
like we haven't
down
had
that path.
offers to screw up the vision
Yeah, it's
before.
true. Yeah, we've gotten some fairly lucrative offers actually that we were nervous that we wouldn't be able to create the vision of the game that we pitched, and so we walked away from those.
Hmm. I do on that, on the flip side of being devil's advocate, I do have to say that you guys have always put player first, and the everybody else first other than yourselves, is what it seems.
Well,
And
I think it's selfish. We're putting ourselves first by putting the player first. In the
well,
end, because
in a roundabout way,
they are
but
our
yeah.
business.
We see it
They
as goal
are our
congruity,
business,
right?
yeah.
I mean that this vision was a specific vision for a player that we felt was being under satisfied. And now I think, and to me, seeing that play all the way through, that's our win condition. So
So
as a
why
company.
why do this equity offering now? Why not do, push more into crowdfunding, or why give up shares? Why do it this way?
Well, I think that it was for us. It was something that we wanted to do from the very beginning. We wanted the customers to be even closer, a part of our business. like I said, in 2013, we were thinking about, hey, how can we go about doing this? How can we actually get the customers involved in the business way back then? And so for us, it's kind of a initial goal that we finally managed to meet.
Well, we also this opportunity when it popped up with Indiegogo was not expected. We were in the middle of another seed round. We had opened another seed round, and we were
one month into it.
we were a month into it. We were $610,000
yeah.
into it when this opportunity popped up. So we actually closed that round early, and instead used that same. It's not the same stock, but technically it's not. But we basically moved that allocation in our minds over to doing this instead, and So our strategy for fundraising from the beginning of the company was always to do a series of tranches. And you can even see that prior to Kickstarter, we did our first tranche, which was 2.3 million,
yeah.
little 2.35, I think, leading into Kickstarter. Kickstarter was planned to be our second tranche. And then we knew that based on that, we could then justify a larger valuation going out for the next tranche. And then which we did, and that was
$2 million.
$2 million on there, and then we had a plan for another one that was another $2 million, and we got 600,000 into it when this thing popped up, and we're like, well, you know what, this makes sense. We've always kind of wanted to do it anyway, and it's kind of interesting. It doubles down on being the kind of company that we are, where we think we're a community-driven company. That's our DNA. I mean, that's community-focused games was actually kind of the brand or the branding that we gave ourselves at the very beginning when we started this. If you look at our original pitch deck way back in the day. So we thought it just kind of doubled down on that, and we liked the idea of it, and we figured, what the hell, let's try it. Let's see where it goes.
We're risk takers at some level. You know, we like good stuff.
An entrepreneur, by definition, is someone who's willing to have great financial risk for a good reward.
So. I like calculated risk. I mean, my personality though is I like to stack the deck as much as possible before we roll the dice. And this one seemed like it, right? It had all of the hallmarks of this could be really good. We had our own community, and then we had Indiegogo to help us get the word out. And that's what really changed the calculus. Previous to this, the first time we took a run at it, the problem was we knew we had our own community, but the restrictions around being able to talk about the raise were scary enough that we were afraid we couldn't harness the power of that community. And we're like, well, given that, we don't want this thing to come out and not take. That would be a giant distraction and a waste of money and time. But with Indiegogo, we're like, given their PR presence, we know that we can get the word out. And between our community and their community, we know that we'll at least hit that minimum number. So to make it worth doing.
I mean, they were marketing to their 7 million backers, this opportunity. So that's great. Not that there's a lot of game activity on Indiegogo in the big, relative to Kickstarter, but still there are backers out there, and they were really pushing it. So, for us, that changed the calculus and said, okay, now it's a calculated risk, not just a giant risk.
Yeah, well, and that for an entrepreneur, that comes with wisdom. So
well, I call it scar tissue, but yeah, you call it.
Well, yes. Well, I always say that that I have paid for my education, and all those failures. I mean, I lost $250,000 in one day one time, and I'm like, wow, that was a very expensive degree. Yes. So but that's how it happens. I also think that it's incredibly smart to invest players into owning portion of this because they're more entrenched. They're going to be longer term. They're more committed. They want to get the most benefit they can out of it, more than just buying an account and playing the game. They now have an invested interest in making the game great. Well, and so I think that's
about
great.
It from our side, right? Our names are mud if we don't actually do well. Right.
Well, it is up to you to make a good game.
Yeah, and we've been in that position since we started this company.
And now a great company too, right? So we have to win on both.
Yeah, we're definitely all in. When I was a little kid, actually, I remember I had a product that I really wanted. It was the ColecoVision, right?
Oh, God, I had a ColecoVision Atom.
I thought it was the coolest idea. I thought it was so cool. I told my dad about it, and my dad went, and I remember he bought us 2 shares or something like that as a Christmas present. And it was the first time I'd ever been exposed to the idea of owning well, specifically in a game company, but owning
Mm-hmm.
anything. And the Coleco later, I think they were tied up with Cabbage Patch Kids. Like it took off and the stock split, and I got to learn about the idea of splitting stock and stuff like that. I don't know that we ever cashed out of that. It was a tiny bet. I mean, it was maybe $100 or something like that. It wasn't huge, but it was a fantastic experience for me as a kid because it was something I did with my dad. I was passionate about it. So I wonder if a fair number of the people who jumped in on our thing, that's not why they did it, right? I'm sure that they expect and hope, and just like we hope, to make it a great investment and see a great return. But I also think it was a chance for some people to jump in from a passion standpoint, just because they're into either the idea of our game or the idea of our company or the idea of
Mm-hmm.
owning in a game company, a startup,
Right.
as a whole. So I don't know. I mean, that's
I
one of the
bought
things I
because
like to do now is get to know those investors and ask them, who are you and why did you jump in?
I bought in because I wanted to be more involved.
Cool. Yeah. Thank
So
you.
Yeah.
yeah.
Well, and
Yeah.
I think
Well, I didn't give very much money, so I don't need a big thanks.
that,
But I'm
well,
there.
and we wanted to make sure, as part of the raise, that people didn't invest money they couldn't afford to lose.
Right.
Right? We
Right.
are a startup company. Anything can happen any day to a startup entertainment company, and we see, 95% of all games fail right out the
Mm-hmm.
gate. So it's a high risk business. There's no doubt
Yeah.
about it.
Mm-hmm. Why why do you guys seem to keep blazing a trail? Why, as an entrepreneur, there's a couple of things. One is you can take what somebody else is doing and you can just do it a little bit better and do it well and make a lot of money. And then there's the people who blaze a trail. And blazing a trail tends to be a lot more costly, a lot
Yeah.
more
Yep.
expensive,
And risky.
and risky. Yes, there's a lot higher risk to it. Why do you guys keep going down this path?
Well, I think it's a risk reward thing, right? The fundamental reason we started the company is we thought the market was broken.
Mm,
The people were doing that incremental. We'll do an incremental take on what's going on. And the truth is that if there's no delight or excitement in the customers, you're not going to do as well as you think you're going to do. Every pitch that begins with, if we only get this percent of wow, we'll be awesome, is a bad pitch,
yeah,
right?
yeah.
So that means that you're actually undershooting. You're not actually trying to do anything but make money. You're not actually
Mm-hmm.
trying to change the marketplace. You're not trying to bring something new to the consumer. You're not trying to move the medium forward. You're just trying to reap what somebody else sowed. And
Mm-hmm.
so, we looked at what we wanted to do and we go, look, we want to do original games. We want to do stuff that is design challenging. We're not saying we're the best technology company in the world. What we're trying to do is be a great design company that brings new gameplay to consumers and delights
And
them.
a great services company,
Yeah.
right? That's the other thing is remembering. I mean, if one thing that you will notice if you kind of step back and take a look at our company from the higher level is that from Kickstarter or pre-Kickstarter really on, we've treated this company like we're already running a live service. We don't act like it's not we're going to run off and be in development for 5 years and then spring this on everybody and then shift from a development company to a live services company. We've been acting like we're a live MMO since the very beginning. So people will ask me like, well, what does soft launch look like to you guys? I'm like, it doesn't look that different actually than what we're doing right now. And we're
Yeah.
already running a service, not 24/7, but probably 50-60% of the time we've got our game up now. We're in a constant iteration cycle where we're always adding new features and content. We're constantly on the forums. We're constantly on social media. We're constantly dealing with support issues. And we're already testing our muscles in that regard. So I think being a customer community focused, that being part of our vision, that's been the case since the very beginning. And I think it's going to mean that the transition to being for reals, a launch product should be relatively easy because it's not any different than what we've been doing the whole time. It's just, more of it.
Yeah. I mean, the traditional thing is go dark, build, 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 toss it out there and hope everybody likes it. And 5 months after our Kickstarter, we started testing, right,
Mm-hmm.
publicly, and we've been testing publicly ever since for more than a year. We've been out testing publicly.
The big
So
wins, though, if you notice that have come out of the space recently, haven't been like that, right? They've been community like Minecraft, right? Instead, he built a community slowly over time, and they basically joined along with him, constantly playing and testing his game and making suggestions and adding improvements until it grew into what it was. Riot. I mean, League came out of a mod, so it was very much the same kind of thing. So that whole model of development just we thought fit really well with the idea of how we wanted to fund and build the startup. So that's the approach we've taken.
Tell me a little bit about how you guys dare to be different, because you're not building this game for everybody.
No. Well, really,
that sucks.
I
I
mean,
mean, when you build it for everybody, it's challenging, right?
it's not really
Then
for
it's
it's
then
not
it's the
really
old
for
folks
anybody.
buffet.
And
No
you really
spice.
can't afford realistically to build a game for everybody, right? I mean, that's just not reasonable. And I find it funny that, the argument of, well, we're going to create the next WoW. Even companies that have hundreds of millions of dollars can't really do that because they're not aiming at it. They're aiming at a moving target. WoW this month is not the same as WoW 3 months ago. It's not the same as WoW 3 months before that. So that's a challenge, right? Is every month that goes by, you're burning more investment money and they're generating more profit. It's almost an unwinnable. Actually, I
Race,
mean,
yeah.
it may be an unwinnable race, quite frankly.
Well,
Um,
WoW is WoW. WoW, WoW is what it is, and it's awesome, right? But that's not what we wanted to build. We didn't want to build WoW. We wanted to build something for when we looked at the market. Even as we were sitting in a coffee shop talking about building a company, we said, "What's wrong with the market? Where's the hole in the market right now? Who are the dissatisfied, least satisfied customers because they've been left behind? And what do we know
Mm.
about stuff that would make them happy that other people may not know as well? And can we envision a product like that? And that's what Crowfall sprang out of.
it's a weird mindset, in my opinion, about in the games industry in general. The idea that it's not a good plan to make a niche product and go after a particular market and not chase everybody else. I mean, no other industry does that. Nobody in Hollywood is like, I'm going to make a Western. They're like, well, that sounds great. How you going to make it appeal to the rom-com people, the romantic comedy watchers? How are they going to like it? It's like, I'm not. I'm making a fucking Western.
Yeah.
That was never part of my plan, so I don't feel like I need to do that. I can make a quirky little comedy about guys who work in, clerks, guys who work in a little 24/7 store, and that can be okay. It doesn't have to compete with Titanic and Avatar, right? So I think, not to say that we're going to be that small and that quirky, but I think for us to carve off a particular reasonable niche and say, this is what we're going to do it better than anybody else. And the people who aren't into that, thanks for taking a look, but that's okay. We don't have to feel like every single comment on every forum says, oh my God, you're going to be the greatest game ever. Our number
Hmm.
of users we need to make the game successful is so small that I think we can be okay with that. It's kind of weird, right? You don't see that in television, you don't see it in film, you don't see it in books, you don't see it in beer. You don't see it in any other industry. This idea that everyone has to make the product that's going to be the one ring to bind them all.
Well, if you think about it, even WoW, when it first launched, was in effect a niche product within the total game industry. Later became a powerhouse, where it literally drove a category, right? So it went from, oh, we're only going to get the people who will go online and pay a subscription,
Yeah,
to suddenly a whole bunch more people were willing to do that for the
because it
experience.
became a thing, right?
Right.
Hmm. They didn't hit their apex until like 6 years in or something
Right.
like
Yeah,
that.
yeah.
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 So, and that's a great plan. I mean, we don't plan to hit our apex on day one either. We
In fact, that's the
plan on
worst.
growing
Like
into it.
that
Right.
to me is a
Absolutely.
major risk factor in a business like this is that you get your anticipation level peaks too early and you get 1 million people that log in the first month and then 90% of them go away by month two. I would rather spread that same 1 million people out over 4 years if we could.
Hmm.
Because we're more likely to keep more of them. The product 2 years after launch is going to be so much better than the product at launch.
Hmm.
Those kind of long tail with a nice slow build that then lasts forever is a much better business model
Then the peak
than the
and
peak
the,
and
the
the
crash,
crash.
which
Right.
we've seen with a lot of MMO launches in recent times. We've seen MMO, the marketing guys get a hold of it. And they go, we need to drive all these people in. They drive in 1 million people, and 80 or 90% of them are gone 2 months later. because they bought them in too early.
That is one thing in the games market right now. All the early access stuff, and even you guys are early access. And the biggest thing I worry about for you and for everybody else is doing this is that people come in too early and take a look at it and then say, "Oh, this is crap," and walk away, not knowing that it's still a year away from release, and they don't comprehend that. They're like, "I saw it, I looked at it, I decided it wasn't for me."
Yeah,
So
the consumers are
Yeah.
not good at knowing when they should enter, right? They hear about it from a friend, they want to get in because they heard a friend said it was cool. They come in and go, well, it's not cool for me yet. But they don't know that. You're right, they're reacting to it the way that it is at the moment that they see it. So, we are, fortunately going after a kind of a refined taste market, a smaller market that's got more refined taste. And they're pretty good about knowing, oh, yeah, I don't want to get in yet because I can't do what I want to do, right this moment. Yeah, do we have some people who show up who shouldn't show up right now? Of course.
Yeah.
It's
yeah.
unfortunate. But, we can't, believe me, we try to communicate as best we can. Like anything, you can't actually, inject your stuff into the mind of the consumer flawlessly. You
For
do your best
myself,
you can.
I won't be fully in as a player until full persistence
Yep.
and final wipe has happened.
Yeah.
Yep.
And whether that's launch or not, that's my entry point.
Exactly. The people that we have playing now, are helping us get the game to that place.
Mm-hmm.
But yes, we figured that it's an order of magnitude different people who will show up when they know it's for real, which
Right.
means it's final wipe. And now
Yeah.
every moment I'm playing, what I'm doing counts. And I'm the same way when I play an MMO. I don't really want to do that much playing until it's for real, right?
Mm-hmm.
So I
Mm-hmm.
understand that consumer well.
Yeah. So, what about this whole area is still on your mind that I have not asked you about?
Well, I think the big thing about this Title III raise would be it's not for everyone as a company, right? You would have to be kind of committed as a company to being open to working with the consumers. You better have your consumers rounded up that you would sell it to before you start doing it. You better have a way to reach them, not just throw ads. Are not going to do it, right? You can't do ads and get this done. You need to already have those people to where you can contact them directly. What else was interesting? So you're going to have to work with a portal. There's a good 8 or 12 portals out there that have various rates that they charge you and all that stuff. There's lots of information on the web about how to look how to shop the portals, about who's doing great and who isn't, and who does the best job.
And how many eyeballs they bring,
Yeah,
right? Which is part
yes,
of it too.
yeah. So one of the things why we went with Indiegogo was not just Indiegogo, it was also Microventures had a large group of accredited investors that they built up in their core business before they did this joint venture with Indiegogo. So we got even more exposure than we would have gotten otherwise.
Mm-hmm.
The other thing so the biggest probably downside to the raise for us, the thing that is that you have to wire the money, that they didn't have a way to pay by credit card, didn't have a way to pay by PayPal.
I
Yeah.
noticed
So
that.
if we were going to ever do one again, that would be a requirement for
That's
us.
the biggest miss I think that we had was that it was the opposite of the impulse buy. There was no, if I just wanted to say sure I'll go in for $100, it was actually very painful to do that from a
Yeah,
payment
I
standpoint.
had a lot of work to do to send in my money.
Yeah,
Yeah.
and that's just not
Consumer
that's
friendly.
not consumer friendly at all. What that tells me is that if that process had been painless instead of painful, we would have actually probably hit the maximum amount, which
Yeah.
was $1 million.
Yeah, yeah, I could see
Um,
that.
Yeah. So, but I think that the other side of it, right on the portal side, uh, you can't like buy stock and then go tell your credit card you didn't actually want to pay for it, right? So
Hmm.
it's difficult for them to take these payment methods without some kind of different understanding than you normally have with them, because they're all challengeable. All consumer pay methods are challengeable.
As you well know,
Oh,
I feel
yeah.
like that market is ripe for some kind of massive. Somebody needs to fix that problem.
It's
It's
called
not just a
Bitcoin.
problem for us, you know.
Yeah. So, okay. Yeah. Well, a lot of good wisdom there. So,
So, but all in all, are we happy we did it? I think yes,
Yeah, I mean
because
it was cool. It was interesting. It continues, like you said. Part of our DNA, clearly as a company, also is in pushing the envelope, and I'm glad
hmm
that we can also push the envelope in the different ways that an independent company can try to fund their game without having to go back to the traditional publishers, because I think that's just good for the industry as a whole. I mean, I feel like right now, because of kind of the way mobile has shaken out and free to play, some of those old opportunities are actually drying up. Like it's harder to go out and get publishing deals nowadays than it was. So we need, in order for this ecosystem to stay healthy for independent studios, we need more ways for people to potentially raise money. So from that standpoint, I'm glad we did it. You know, it opens up a new avenue potentially. So, which is one of the reasons we're happy to talk about it.
Right.
We might as well share our learnings.
Right. I'll be talking about it at GDC this year too for the the other game developers. But I think that when we think about our business, our particular business, when we first came up with this, we looked at the publisher funding options, and they really weren't there. All the money was going into social or mobile at the time. There's no appetite with the larger publishers for big MMOs, and you can see that by the small, very small, almost non-existent number that are coming from major publishers in the future, right? There used to be a pipeline all the time of 15 to 20 to 50 MMOs in progress that were being funded by traditional game companies.
And 2 to 3 really big ones, right? There was always 2 or 3, ESO or WildStar or whatever, really, really big bets that were coming out in the next year or 2 years. And it's kind of devoid of that now.
Right.
I mean, the big titles coming out, I use big in quotes, are Us, Shroud, Camelot. I mean, that, and I guess obviously Star Citizen, if you want to consider it an MMO, though
it's still vaporware.
Well, whatever, but again, there's...
Hopefully it comes out.
No, but the traditional market, even though 20% of the total money bought in by game software is on MMOs, the traditional publishers are not funding them at this
It's really interesting.
Which for us is like a giant blue ocean.
It's crazy.
We're
actually,
going great.
Right?
Think about no big guys are competing with us.
Well, you are the big guys.
Well, we're not. We don't feel like a big guy.
But in this space, I mean, you're wielding a lot of influence in this area.
Yeah, but from a budgetary standpoint, right, we're still we're kind of an in-between. We're not truly like a tiny little, project. But compared to an MMO, most MMOs, we are a tiny little project. I mean, a 10, 12, whatever $1 million, wherever we end up drawing the line on launch, that kind of budget is nothing compared to a WildStar or an ESO or, God forbid, an Old Republic, right?
It's a couple of months of the Old Republic build.
Yeah. Wow.
So, it's nothing really. And, that's the thing, we're figuring, and we're also building smart, right? So we're actually, because we have to build it on the cheap, and we also have to build it really smart. And so we managed to take all our experience from the other games that we built and capitalize on that, which is great. We're not having to make, the first or second or third time mistakes on this when we're avoiding those. We're trying to make new mistakes and hopefully not as painful ones.
Yeah. Okay, guys. Well, thank you very much for taking the time to talk with us today. I've learned a lot about this stuff. So, now I'll consider doing this again with somebody else as well. But basically, I'm all in supporting you guys. I'm loving the game, so I'm loving the vision, and
cool.
looking forward to where we end up at in the future. So, getting lost in Crowfall.
Awesome.
Very good.
Okay, so thank you very much. And there are links in the description about back to the original to the original ask on this at Microventures, and then also to Crowfall. So if this is your first time actually seeing it and you're here because you're like in business and want to check out Crowfall, there's also a link in the description for that. So, okay, guys, it's been awesome.
All right.
Look
Thanks
forward
for having
to
us.
playing with you. Yeah.